Yo, what's going on, guys? Welcome back to the channel. In today's video, I'm going to go over the trades that we took on Friday as well as the game plan going into this week. So this is what we looked like on Friday off the open. So when we pull up the Friday contracts, this is what we looked like on Friday. If we go to 30-minute here, very choppy chart here on the 30-minute. So right off the open, I'd be considering this market neutral just because we are, obviously the estimates are crossed, but this 50 estimate is very funky. Wouldn't consider it really truly a bearish market. Because we did close below the 50, another candle closure below the 50, so still neutral market on Friday. Really wouldn't consider this like a true bearish market. And then if we flip to the call side, obviously nothing on the call side is really telling us anything. And then the 0-day chart. So this is how you would have gauged an entry today. All you had to do is just wait for a cross. If we got a cross on either side, you would have taken it. Why? Because if the calls ended up crossing, the 30-minute chart and the puts went negative, and we would have got to move higher. And if the puts crossed, obviously market would hold that bearish trend, even though it really isn't that true of a trend just because of how choppy the chart looked. But if we got a put cross, that would drive us lower. So if you go on the call side today, not today, on Friday, look what happened. There was no opportunity to long. There was no reason to long based on this side of the 0-day chart. There's no cross. There's no 10-50 estimate cross. The 10 is the green line, 50 is the blue. We never got the cross, so there was no entry to take on the call side. And then we flip to the puts, very choppy chart. If you look here, though, there was only truly one entry point because right here, 10 went above the 50, but guess what? This 50 SMA sloped down, no entry right here. There's no reason to be taking this trade. The 50 sloped down when we crossed, no entry there. And then with how the action was, I wasn't going to go ahead and take any negative crosses just because it was so choppy. Best trade to take on Friday was just a call cross, or not a call cross, a 0-day cross. So we finally got it right here. So actually, we crossed again right here, but guess what? 50 SMA is down once again, so there's no entry. And then we recrossed right here, but guess what? 50 SMA sloped up. Your entry's on this candle close. Boom, you got a nice move out of it. These contracts went from 256 all the way up to 423 on the premium. That's a solid move. I mean, that's all you needed for the day. That's the only trade opportunity there was. And then obviously we got this cross and a close, but I mean, I'm like, what time is this? Like 3 o'clock? Yeah, not taking anything this late in the day, especially a cross this late into the day. And especially on a day like Friday where we're just whipping back and forth. So, like the last hour of the day, really wouldn't consider taking any crosses or any trades based on these charts because the theta is killing them, and that could just mess up the crosses. So that's how you would have played Friday. Fair, like it's just simple. I mean, this is why the system's great. I go over it, time and time again. When we do, get some movement in the market, the system will give it. We got a nice move lower. It wasn't anything crazy, but it was a choppier day. So I'm not just gonna take every trade the system gives when I know the price action isn't in my favor. So when we look at the 0-day chart again, I'm on the wrong contracts, but when we look at the 0-day chart, you could see, okay, yeah, we got this negative cross right here, but on Friday, you got to understand there's certain times where I'm not going to be taking these negative crosses because of this 30-minute chart. This 30-minute chart is very indecisive on what it wants to do. It's hovering around such a key spot here, which is the 50 SMA. So, that negative cross on the put side, I'm not taking. There's no need to take that because this could still hold the 50, flip us bearish, and we're going to go lower. So on Friday, all you had to do is just be patient and wait for the cross. That's the great thing about the system. Most of the time when we get that cross, we're gonna get a move. The market's gonna move, and that's why I like it so much, because the market could chop all it wants, and when the market finally decides to move, guess what will happen? We will have a cross on one of the sides of the premium. That's the great thing about it. That's why I like it so much. That's why it works so well, is because when the market moves, it's impossible not to be able to catch the move because there will be a cross that happens throughout like a big move. I mean, it's just how it's designed, and that's why I feel like the system is one of the best there is, because when to expect a move in the markets. And even it's very choppy day, sometimes we do get some sort of movement, and when we get that movement, system will catch it. We'll get that cross in the 0-day chart. Obviously you're not going to win every trade. Like, there's going to be losses where we cross and it comes back down and we break below the 50. I mean, it happens. Like, we're not going to win every trade, but just knowing the conditions and knowing what you want to be looking for every day is most important, because someone that's newer to the system probably was going to be taking that negative cross and probably got burnt because they're not really looking at the 30-minute or just understand that the market's shopping around. Just wait for the call cross or the put cross, and you'll be good. And we got the put cross right in here, right here. 10 goes above the 50, 50's curling up, and look at the move. 70% on the contract, 60%, whatever that is, solid move. Nothing too crazy. So that's how you would have played Friday. Very, very simple. You just got, it's a patience game, man. Like, you don't need to be guessing when we're gonna cross. Just take the cross when we get it, and you'll get paid. Pretty simple. So going into tomorrow, what do we look like? Again, market is bearish at the moment, but I do favor the bulls, and I'll go over why. I mean, it's pretty simple. So, you know, this is kind of like a new variation of the system. It's just like a higher, like more, like much higher time frame outlook. So if we go to these contracts real quick, it's pretty simple. So daily chart sitting right around the 50 SMA on the like super higher time frame contracts. In the private, you'll understand, you know, how to get these contracts. It's the same thing. To break it down, you just pick the monthly contracts, round to the nearest fifth every Monday for the contracts. Like for the strike price, you use the like monthly contracts for the next month out. You use them up until the like week before they expire. So once we get to the week before, then you go out to the next monthly contract, do the strike price the same. It's pretty simple. So yeah, we're probably going to get different ones, though. It might be like the 600s, maybe, depending on where we open. So the 50 SMA is probably maybe a little lower, or yeah, it's probably a little lower than it is right now. Obviously, futures are gapping down a little bit because of the news over the weekend, but I still remain bullish. If this chart does like start to go negative, then I would definitely be more bearish. But until that happens, I can't have that bearish bias, really. Again, and then when we look at that 30-minute, I mean, this chart is very, very funky. I don't know. This 50 SMA is really weird looking. Obviously, we'll probably gap down on or tomorrow. But again, we had this 4-hour 50 SMA in the way. So if we somehow get to this point down here, I still favor up. I favor the dip get spot because this is sloped down really hard, and it's major resistance area. I don't think we're gonna, you know, blow past it. And if we do, okay, that's fine. I'll probably be able to catch a trade in the mix of that. So yeah, that's just my bias. You know, it doesn't mean I'm trading that direction, but I do have calls for like some individual stocks I went over in past videos, like Nvidia. It's a really bullish chart. Again, I'll just see how we open up tomorrow. We'll be picking new contracts on those, so depends what those look like, how we open tomorrow, and yeah, that's pretty much the game plan though. Again, bearish market, so focus will be on the short side. If there's any 50 dips on the put side, the put side crosses on the 0-day chart, that'll be another trade to take, but it will probably already be crossed. And if we are crossed and they cross negative, then they recross, that's a trade to take. So you take that, you know, not the negative cross because market will be bullish, but you take that cross on the put side, the positive cross, if we get it. And then if we just absolutely rip face tomorrow, then 30-minute chart would go negative, and then I'd be open to taking that call cross on the 0-day chart once the 30-minute 50 gets lost. So yeah, that's the game plan for tomorrow. If you guys enjoyed, drop a sub. If you guys want to learn, join Discord down below. That's the place to be. But yeah, I'm out. Peace.